Good afternoon, everybody. Welcome to the Midday Update. I'm Laz. Back again, and not much change from yesterday. Yesterday I talked about, the theme of the video was really about how to, or what to do in this area. Traders are constantly asking, should we get long? Is this the place you want to get short? What do we do? What do we do? Well, yesterday we talked about the market being in an area where we've had we had the big move down. We got that relief rally through the Thanksgiving holiday week. The market's had a nice, impressive snapback. Now, what do we do? And I said yesterday, I really thought we needed to just sort of sit and wait for some clues. I don't necessarily know that the upside, we're done, the market's done kind of probing that bounce back. So let's take a look at the chart here, and let's just sort of jump right into the analysis here. We have the highs that we put in here in September, and our lows back from a week or so ago. Literally 50% snapback on the numbers as it stands right now. I do think we could possibly get one more pop into the 618 retracement. That's about 143. And the reason I think that is that there is an open gap here. If you look to the left where I sort of make these annotations, you'll see sort of an open zone, if you will. And I know from experience that generally markets and charts don't like to have open gaps left unfilled. So I suspect you might see one more pop to the upside, and then maybe a pullback. Again, a pullback is not a bad thing, especially if you're a bull. Pullback is a healthy thing. We gauge strength based on weakness. So what I'm saying here is that I'm looking for a pullback to gauge how actually strong this tape could be, or how weak it could be. A very controlled pullback, like I talked about yesterday, where you sort of get that 3 to 5 day pullback. Could lead, like I said, to some more upside. So we need to give this market some time. I am personally looking for an opportunity to nibble on the short side in this area. Again, I think we could still see one more pop to the upside before then turning down. That's just my hunch and a little bit of speculation there. So we'll keep an eye on this as it develops. Intraday, let me take these lines away. Intraday, not much happening. Here's a 13-minute chart just to kind of get a sense of the intraday. Yesterday we gapped down. We tried to trade lower through lunch. We found some support. We came back up, tested into the highs from I guess it was Friday of last week. And the market, trying to figure out what it wants to do in this upper area. There's definitely some sellers or some resistance up in this zone. You can see some topping tail, some topping tails developing over here, but the market's still trying to, looks like it's still trying to, probe higher. So keep an eye on this level and what happens. Should we get a trade through, this upper band? It's about 141.40, 141.40 in the SPYs. So we're going to keep an eye on that level over the next couple of hours here. A couple of other stocks just to touch base, through the update. Obviously still a lot of eyeballs on Apple. Looks like we found a little bit of short-term resistance here, which isn't an unhealthy thing. Here's a 30-minute chart around 590. Had a big move. This is November 16th. What is about 5-6 trading days. We've had about 90 or so points tacked back on to this stock. So we've seen a nice, healthy retracement here. Short-term, 590 looks like it proved to be a little bit of resistance. That was yesterday's highs. We came in this morning. The initial trade was immediately to take some profits. Here's some selling through the first 30, 45 minutes of the day, starting to retrace here intraday. And probably at a key retracement level, I would watch this level as we might see one more push down here. This is probably about a 786 retracement in Apple. So you can see that 786, and usually it's a very deep retracement, but I would suspect maybe we will trade back down to the lower end of the range intraday. So keep an eye on that one for really more of a day trade at this point. Apple does need to, it needs to build some sort of, tradable level here. It's had a big move. You don't want to be a buyer and chase this thing. You want to look for maybe a very controlled pullback. Like I said, when we talked about the S&Ps, a very controlled pullback, that possibly then rallies up and goes higher. So that's kind of the way I see this trade developing. And you don't want to fight this at the same time. You don't want to just try and pick tops or do anything like that. Let that trade sort of develop. You definitely have a level here, like I said, at 590 to trade against, which could develop into, again, just another short-term pivot area that we see new highs. So again, very, very strong trade, and very, very good snapback in a very short amount of time. So, but right now, really more for the day trader, the active trader, someone who's really got, who's working off of smaller time frames. Another high beta stock, Google, coming back to life a little bit today. Google really hasn't participated. I talked about this one yesterday. Really not much of participation here. When you look at where the market has gone over the last 7-8 trading sessions, the stock has pretty much languished, but catching a bid today and looking like it wants to try and push higher. Again, let's go intraday. Intraday, nice move here happening. Look to, I think for the shorter term traders, you can probably look to buy a pullback. Another high beta one I'm going to talk about real quickly is Amazon. Amazon, a nice 6-day, 7-day up move off this 220 low. This morning on the VTF pre-market, I said 246 is an area what you got to pay attention to. Again, retracement levels. These are our, prior pivot highs from September to our November lows. We've come back roughly about 62% in this area where you tend to see these, short-term moves sort of fizzle out, and like I said, we might get that, that strong push down over the next couple of days where the stock pulls back before possibly legging higher. So we are at some of these stocks, depending on where where your attention is. Some of these stocks are at some very interesting zones where it's going to be very, very difficult to commit capital to the long side. It's also right now not so easy to just throw out and be short. You got to wait for some signals and some things to develop. But it looks to me like some of the upside momentum in some of these high beta stocks that have seen really nice snapbacks over the last, like I said, week and a half, kind of fizzling out a little bit, but really no selling on the tape, just more of natural sort of slowdown of momentum. Facebook, another one that's been a nice trade for a lot of traders. Again, momentum slowing down here from basically 19 to 26 into this gap zone here in Facebook. It's provided, a decent trade, probably still going to try and probe a little higher. This gap gets filled somewhere around this 27 mark. So it looks like it's kind of just taking a day off, a little bit of a pause type of candlestick. This might lead to, again, a 2 to 3 day pullback. Watch to see how it acts as it pulls back into these rising averages here on the chart. For those of you that are more inclined to step into this for a swing trade, I would look to buy a pullback in RIMM. Another one from 6 to 12. I talked about yesterday how this was short term, overdone to the upside, and a pullback would probably ensue. Like I said, a pullback into, the 10 to 950 area to me would be an ideal opportunity to stick my, to try and, get in there and carve out a little bit of a buy situation for a long. Again, looking to buy a pullback here in RIMM. If the stock is going to continue, it's going to pull back into these rising averages and then, find some support in here and then, possibly turn back up. So give this one a chance. And, yesterday we talked about the banks sort of being out of play. And again, not really much happening here in the banks. Goldman, not breaking down, but not really rallying, just sort of languishing. JP Morgan, another one, not really here or there, just kind of trading sideways, waiting for, I guess, this market to really make a stand. You'd like to see the banks participate a little more and show some, good impulse to the upside for the bulls. But, that trade just not quite, surfacing. Another sector that I think has a lot of eyeballs is home builders, and we're going to take a look at the HGX. Housing sector, home builders, again, snapping back, approaching prior highs. Let's take a look at some individual symbols. Here's Ryland, building a nice 3-day controlled base. This to me looks, fairly bullish. Might see some more upside here in RYL in the days to come. Pulte Homes, again, starting to look more bullish. Snapping back, a couple of days of basing over the last 3 sessions, trying to break higher. It's going to have to contend with, this upper band of resistance. But this sector to me still holding in and still hanging in. And you could see some buying opportunity in that one as well. eBay, another shining star, if you will. I wouldn't be a buyer of eBay necessarily right here, right now, but breaking out yesterday on some good volume. A couple of days of contraction, even a controlled pullback here. To me, could set up a nice buying opportunity. So keep that one on the radar for those looking for some long setup. So right now, the market's it's at a point where the S&Ps could see a little higher. We could also start to pull back a little bit after a nice 7-8 day run. Pick and choose your battles very wisely here. There is some opportunity for the short side. There's still some opportunity for the long side. You got to pick and choose your stocks wisely and make sure you're trading with the appropriate trend appropriate trend of your specific symbol, because right now both trades are viable right now. You can make money on the short side, and you definitely can make money on the long side. So pick and choose your battles wisely. As always, have a great day trading. I'm Laz, and I'll talk to you on the VTF a little later. Take care.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.